Hello, traders and investors. Thanks for joining me here. My name is Vic. Welcome to the analysis of DXY dollar index. The dollar has been bullish once again. It took a little bit of break here, but now it has started to move up, and that's exactly what I mentioned in my previous analysis. But even before we go there and try to see what kind of opportunities we have, or what dollar is expected to do in coming time, let's see what is happening on higher time frame. So I'm currently looking at monthly time frame, and it's quite evident that we have got few structures here. So one is that we have got this W pattern, and that is why the market is going up. Another one that we have is this W pattern, and that is why the market is going up. Now these W patterns have not completed yet. They are very close to their completion, but they have not completed. You will also notice that we have another W pattern here, and that has also been pushing the market up. So if you notice here, what we had was simply a consolidation, which I've covered a few times already in my previous analysis. So we had multi-year consolidation here. The market started to go up after creating a double bottom from here, started to rise up. It went to the mid of the channel, took a little bit break here, and then started to go higher. Here, it took a little bit break because it wanted to test this previous high or previous, the upper range of this channel, and it broke through in this candle, and then since then it has been moving up. And all of this has been covered in previous posts, previous analysis in Telegram group and other places. So you can actually go and check them out if you want to learn about it, or if you want to see how it has progressed over time. Now, what has happened here is that market is still actually creating this W pattern, and it is kind of it created an initial reaction here where the market fell down. Now it is probably trying to go back up. So let's go to the smaller time frame where it can actually start to make more sense. So if I look at the local structure here, this is what happened. The market came here, fell down, and now it is going back up. Why? Because it wants to test the previous high or want to create a double sort of thing or W pattern sort of thing. Why it has been going up? Because we had this very nice trend line here, and that's why in the previous analysis I mentioned that I was looking for a bullish move into the dollar. And that's exactly how it has been happening here. And we can see that trend line uh, here. This is the right trend line here on the right hand side of your screen. So this is a trend line which has pushed the dollar up. Okay, so let's look at what is the whole analysis. If I go back to the monthly time frame and squeeze the chart out, so these are the targets. Now if you have been following my analysis or have been watching my videos, you know that it has been, I mean, we have been using this analysis for years now. We started this analysis around here, which was August, which was, let me just quickly check this, which was near about um, May 21, and now the market is right there. So since this particular point, we have been bullish. Majority of the media reports have been saying that dollar was dying. It was going to go to 78 or 76, even lower than that. But we have been bullish because of our simple FCP analysis. Now the market has reached FCP zone, which means that there was an expected reaction to that, and this previous fall was simply an initial reaction which actually happened here. Now the market was expected to go higher. Why? Because it is most likely going to reach this particular 1110, 110.270. This is where we have the target one. Okay, market has been moving from the breakout towards the target one. So this is what we are looking for. In this process, we have two W patterns. So one is finishing right now. Let me actually show you that on a different chart. So if I go even to the smaller time frame, like a daily time frame, now here you will notice that market has created a W pattern here, which means that market can actually go down a little bit, probably to test this midpoint. Otherwise, what will happen is if it breaks through the previous high, then it is going to go to 110.27, and in that process, it will probably create a divergence. So if you're using Vata and Visage or any other oscillator such as RSI or a stochastic, then you should be able to check that divergence. And because we will be in FCP zone, and this will also be an area where the W pattern will complete, we can look for short positions. So if you are currently long, then you should start managing your positions. And if you are looking for a short, then you can start to build your positions, but manage your risk. Why? You need to manage your risk because there is still a possibility that market will break through this FCP zone to go to a even bigger target, which is approximately 113 to 115. And if that is also broken, then we have 127, which is extended target. So if I go back to the monthly time frame, um, so the first target is around 110.270, and the second target is near about 113, this particular zone. And after that, we have a third target, which is approximately 127. Now, I'm not suggesting that it is going to go to second target or third target. What I'm simply saying that if this FCP zone is broken and confirmed, then only it will go to 113. And if this FCP zone is broken and confirmed, then it is expected to rise to 127. And why? What's the reason behind this? Because very simply, we have this W pattern here, which is coming into this FCP zone, but there is an extension of that W pattern which goes into this. And if that is also broken, then we have a bigger extension of this W pattern which goes like this. So there are three W patterns on higher time frame. One is here. Okay, this is the current state near about, and then we will have a little bit higher, and then we will have like this. So there are several kinds of WNM patterns. So this is already mapped, and we have been using this analysis for quite a while now. So this is what it is. Now if I show you the previous analysis, like one of the um, other scenarios, so this is also here 110, near approximately 110 FCP zone. If you have been following my analysis, you know that I have not changed this screen for months now, and this arrow has been there for months. So this is what we are expecting. This is possible only if this W pattern does not make the price to fall. Okay, so this is what we have on DXY. Hope you enjoyed this analysis. Let's look at Euro USD. Okay, Euro USD. Let me show you what actually happened on higher time frame. On higher time frame, if you remember my previous analysis, I posted this analysis when the market was approximately around here, right? And I said on weekly time frame, I said if the market was going to go and touch this line and it was going to act as resistance, then market was supposed to fall to this real particular target. Now the market fell through that. It performed a retest of the previous high here, and now if you pay attention to the last week's candle, this is looking like a huge engulfing candle, which means that market can still push down. So in my last post that I sent, I said like this further possible target is available here. um, but you should be careful that we have this parity figure 1.0, and this is what I mentioned in the previous analysis, that the market usually comes back to retest these important levels, and sometimes it goes beyond as well, just to collect the stop losses. Because majority of traders, investors, and even banks, they have been expecting this parity level, right? So as soon as the market crossed through it, a lot of people built the positions. They started to take long positions from here, and it actually started to go higher. But you see, this particular strength is not that much, right? I was expecting huge movement, because this is this is a very rare event, where USD and euro are in they have become equal. So but this strength is not enough, which means what? It means that market is expected to come back down to retest it. Now in during the process of retesting, there are a lot of stop losses below the previous low. It is quite possible that market will probably come down to test this FCP zone, and then it will go back up, and then it will rise. So if euro USD is going to go down, you can naturally expect the DXY to go up. So, or vice versa, right? So that is why I'm expecting that DXY can still rise up. So I'm careful here. I'm looking for short-term short positions, not long-term short positions. And I've already managed my long positions here since last week. So if I get an opportunity to go short, I will do that, but not for a long term. I will just probably go for like in a day trade or a couple of days, small time swing trade, that sort of thing. So this is what we have on Euro USD and DXY. If you enjoyed this analysis, please make sure that you support this channel and support this video and free analysis, and share it with other traders and trading communities. And I'll see you in the next one. Have a great trading week.